Okay, why don't we get started then? Thanks everybody for coming. My name is Mike Aguilar. I'm the president and founder of the Fiscal Challenge, and we're really proud to be running this series of webinars with some of our great partners. We have the AEI today. Matt Jensen's joining us. Let me just read through a quick bio to give him a proper introduction, and then I'll lay down the course for the logistics for the time we have together. So Matt runs the TaxBrain. It's an interface to access open source tax models created by the Open Source Policy Center, OSPC, at the AEI. Matt's one of the founding directors of the OSPC, actively participates in educating the next generation of open source contributors as a lecturer and founding member of the advisory board for the Open Source Macroeconomics Laboratory at the University of Chicago's Becker-Friedman Institute. He is a founder and chairman of the Open Resource Group, which is a public benefit corporation that harnesses for-profit incentives to cultivate open science, open data, open source projects. And because of his extensive experience with economic modeling, he contributes to the legislative process for tax reform and government transparency. Thanks, Matt, for helping us tonight. So lay the land. We're gonna have probably about a half hour of presentation or so, some Q&A afterwards. And Matt has kindly agreed to have questions throughout, which I think will make for a much more interactive session. So for anybody who's participating, you should see both a chat feature as well as a Q&A button, and we'll be monitoring those as we go along. So if you do have a question, feel free to plop them into either of those venues, and we'll do our best to get to them as they come about. So Matt, let me turn it over to you.
Thanks, Mike. Thanks to everyone who's listening in too for having the interest and the passion for fiscal policy, which we're going to be learning a little bit about today. What I've got up on my screen right now is the Congressional Budget Office, which you can find through Google by going to cbo.gov. A lot of you are probably familiar with the Congressional Budget Office. They are one of the...
Matt, may I interrupt? I apologize. You said the CBO, the screen right now just looks like a Google page rather than the CBO website.
Okay, let me try something else. I see, okay.
I apologize for interrupting. Perfect.
Are we back in business?
Yep, perfect.
Okay, thanks, Mike. Right, so the Congressional Budget Office, they analyze the policy, the effect on the budget of different policy proposals. They work for Congress, primarily for the Budget Committee in Congress. There's a similar organization actually called the Joint Committee on Taxation, which you probably haven't heard about to the same extent that you've heard about the Congressional Budget Office, but they do very similar work. The Joint Committee on Taxation focuses on taxes. The Congressional Budget Office focuses on non-tax budgetary analysis. These are extremely useful resources when you're thinking about fiscal policy, because they've estimated the effects of many, many, many different types of proposals over the years. And you can go to their website and you can dig around, and you can actually find some of these analyses that they've done. And so if you're trying to build a package of provisions to make a policy reform, these are good resources for figuring out what are they going to be the costs of the provisions in those packages. You can kind of add those together and get to the cost of your package. One resource that's that the CBO maintains that actually requires the cooperation of both the CBO and the JCT is something called the CBO budget options. I'm not going to try to find it on the CBO website, but I'll find it on Google for you, which is always a more effective method of finding things. So the CBO budget options it's a comprehensive report that the CBO releases. I believe it's every year, it might be every 2 years, that has many, many, many provisions that you can choose from. And this is probably something that all of you are familiar with, or maybe you've seen this before. It's a very helpful resource, but there's a major constraint when you try to use the CBO budget options. There are actually two major constraints. So the first of them is that if you go in here, you look at some provisions. Let's say we go to the tax section, revenue options. We'll see. Let's see if we can get down there. Here we go. So you'll see a lot of different options for changing the tax provisions, and you'll pick and choose among those. Maybe you'll raise all taxes on ordinary income by a percentage point, and you'll want to raise ordinary income taxes on, and you'll say, okay, we're going to take that option, and we're going to go down here, and we're going to take this other option, which is implement a new minimum tax on adjusted gross income. And you see, okay, we've got, this is going to raise 66.2 billion. This other one was going to raise 734.2. And so you might be tempted to add those numbers together. And unfortunately, you can't really do that, because if you add those numbers together, you're going to miss the interactions between the two reforms. In this case, if we have an alternative minimum tax that is being applied when the tax rates are higher than they are under current law, then the alternative minimum tax is going to pick up less revenue. And so, this 734.2 number might be kind of accurate, but the 66.2 number is probably significantly too high. And so you're going to run into this problem over and over again, where you want to combine different provisions from the CBO, and you can't do it because you're going to miss those interaction effects. And it gets to be a little bit more frustrating, because what you'd really like to be able to do is go to the CBO and say, okay, like, you've got all these cool features of the models that you've developed. We'd like to use those for our analysis. So why don't I just go to the CBO and I'll take their model and I'll run it for myself, and I'll actually look to see, okay, what happens if I implement both of these reforms at the same time inside of their model, so I make sure I catch all those interaction effects. You can't do that because they don't give you their model. And so if you can't work with their model, it means that you're going to have some difficulties with that kind of thing. It can also be frustrating not to have access to their models, because it means that you can't really dig in if you're curious. Why is this 66.2 number 66.2? Why isn't it 59.6? Why isn't it some other number? And you just have to kind of take their word for it, which, if you've had any education in economics, you'll know that there can be disagreements about things, and and taking someone's word for stuff. That's quite precise. 66.2. It's not 66.3. It's 66. So you just have to take their word for it. All this sort of frustration, and then some others, has encouraged a number of folks, including myself, to work on an open source alternative to the work done by CBO and, let's see if I can type and talk at the same time, economics. So we've created an open source alternative to the work done by the CBO and the Joint Committee on Taxation. What does that mean? That means that, okay, you can actually go here, you can grab the source code, and if you want to, there is all of this documentation. You can go down here, look, user documentation. If you just search Google for tax calculator, open source policy center, you'll get this. And there's this really cool model. You can run it, you can download it, you can do all this stuff. If you want to go dig through the source code, you can go dig through the source code. I'm not going to show you any of it right now because no, we don't have time, and I'll leave it to your own interest to pursue further in-depth digging there. But the really nice thing is you don't actually have to go through and dig through the source code, because we've made a web application that you can use without having to run the source code. And so that's what I want to talk to you about today, which is this tool called TaxBrain. This is ospc.org/TaxBrain. So TaxBrain, it's an interface to this open source model. You don't have to know what's in the .travis YAML file in order to run TaxBrain, which is nice. What you do have to do is kind of figure out, okay, what do all of these different provisions of the tax code mean? Because on TaxBrain, what it gives you the capability of doing is changing provisions of the tax code and then getting estimates for what the impact on the revenue and what the impact for people in different income groups are going to be. There are a lot of options. There are, I think, probably close to 400 options at this point. You're probably not going to want to learn about all of them, but when you do want to learn about one of them, you can go in here, you can read some of the details, or you can write and ask questions over on our GitHub page and ask for a little additional help. Just open an issue here. Here's the URL. Open an issue if you have some questions. For the sake of a little demo though, let's actually go to 2018 year, because we're in 2018. The reason why it's set at 2017 right now is that some of the provisions, especially this one, there's a provision in the recent Tax Cuts and Jobs Act that requires changes in 2017 as well as 2018. So we've got the start year here set at 2017, but most of the juicy stuff is on 2018. So let's go there. So we're on TaxBrain, we're on 2018 start year now. And what do we want to do? We want to raise taxes, cut taxes. Let's do a little bit of both. So we'll raise the Social Security payroll tax rate. So this is the tax that's coming out of everyone's paycheck to go for fund the Social Security system. It's actually, some of it's paid by the employer and some of it's paid by the employee. What we do here is we add the two together. So you might think, okay, it should be 6%, but it's actually 12.4 because we're adding the employee and employer side together. Let's change that to 14%. So that's a pretty significant. Let's do 14.4%. If you want to change it for multiple years in a row, so right now what we're doing is we're changing the 2018 value. Let's say you want to change the 2019 value also. You can put a comma here, just do comma separated, and then 0.15. We've got some tips up here for the different types of things like that you can do. Here, enter comma separated values into a field to indicate the multiple years of tax law. Do not use commas as thousand separators because it'll confuse the software. So what we're doing is in 2018, we're going from 12.4% under current law to 14.4% under our reform in 2018 and 15% in 2019. Now let's find a tax to cut. So the standard deduction is an amount that a lot of tax filers, people who don't have what are called itemized deductions. Itemized deductions include things like if your mortgage is really big and you're paying a lot of interest on your house to the bank, then you can deduct the interest against your taxes up to some cap. But most people, especially after the Tax Cuts and Jobs Act, they're going to be taking this standard deduction, which means that, okay, I've got $100,000 of income. I can deduct $12,000 from that, so I'm only going to pay taxes on $88,000. But what I want to do is I want to cut taxes, and so in order to cut taxes, we have to raise the standard deduction. This is for single filers. So let's raise it to 24. Let's just double it for everyone. We might as well be extreme, right? 48,000, 24,000, and 36. Okay.
Do you mind if I interrupt for a second? I just got a question. I'm thinking about our students who might be using this for the fiscal challenge competition or otherwise. And let's say they don't know enough yet about the standard deduction amount. Does any of the documentation explain that or give references to where they can go to learn more about it?
Yeah, so this is the amount the filing can use as a standard deduction, and that doesn't tell you a lot.
Right.
But what it does tell you is that you can go look at Form 1040, line 40. And so all of these are actually references to the actual tax forms. You might not know what Form 1040, line 40 means, but again, if I type in Form 1040, a lot of people, especially in March, April, are going to be searching Google for Form 1040 because they have to file their taxes in the middle of April. So you're going to get here, and then we can go down and we can search for the standard deduction. And then you can actually read on this form, you can figure out what it actually does. And you're going to have to do some work to understand how that, you have to understand the math, you have to understand the arithmetic, but it's all laid out here, kind of laid out for dummies by the IRS. To the extent that the IRS can empathize with dummies, they try to make it simple for us. So go onto the form. For most of these parameters, we are giving references like that where you can go and learn more about it.
And how about the other layer of this, which is not just the definition of the parameters and the inputs, but also the modeling structure? I know that we could go to the code. Is the code documented so they could actually look at what the model is to incorporate these?
Yes.
Great.
So it's going to be, it's like an onion, right? So there are different levels that you can peel back here. If you go to you're on Tax Calculator, GitHub. This is a common tool for source code storage. You're on our GitHub page. You say, okay, I'm going to go read the user documentation. The user documentation is going to tell you about the structure of the model. It's going to tell you basically what's going on. I'm also going to tell you in a couple minutes what's going on, but if you want to go read more, go to the user documentation. This will help you a little bit. But then let's say you want to take it a step farther. We can actually go in and start clicking around in the code here, and we can, especially in this file called functions.py, which you'll find if you start clicking around here, you can search for standard deduction, and you can actually see where this is implemented in the code. And this code here is essentially just a instance of the federal tax system, at least the individual side of the federal tax system in Python. You can even just read the English, which is here. Since we're on this subject, a quick note or sales pitch or whatever you want to call it. My view is that we right now we've got the people in the White House who are using this, people in the tax writing committees in Congress, people in the leadership committees in Congress, the New York Times, the Wall Street Journal, the Washington Post, like all these journalists, the policymakers, the journalists are using these tools. And so if you're a student and you find a typo in here, or if you find another way, bigger or smaller, to enhance this tool, you're directly impacting the policy process through contributing to the open source community, because you're going to change this, and then the next person who's going to be reading this is the guy in charge of tax policy for Nancy Pelosi or Mitch McConnell or President Trump or whoever it is. And so you can, as a student, you're 18 now, you can go vote, or you can make a real contribution by making open source changes to a tax model. Anyways, that was a quick aside. Going back to TaxBrain. Okay. So actually, I just realized, and maybe you'll miss this, but I'm going to point it out to you. So when I'm looking at this right now, I just found a minor bug on our web app, which is that, a day ago, these had labels for single filers, joint filers, head of household filers, married filing separate. That'll come back in another couple of days. I think I'm the first one to notice that bug. What happened is we ended up doing a dramatic efficiency enhancing change on the front end here, but when you enhance efficiency, oftentimes missed some details. And so, so that'll be back in a couple of days. So by the time you get around to using this, it'll be even simpler than it is now. But this is single, this is joint, this is married filing separate, which people only really do right before they get divorced, by the way. And then this is head of household, which is someone who's filing with children, other dependents, but they're filing singly with dependents. So finally, let's get to the results. And so it's actually happening right now. I think it's going to go faster than what I can explain it. But what's happening is we're running the tax code on about 300,000 representative individuals. We've got tax data for about 300,000 individuals who are representative, individuals, families who are representative of the US population. When you apply some weights, it adds up to the US population. We're doing like TurboTax on steroids, calculating taxes for each one of them. We calculate taxes under current law, which is now this new Tax Cuts and Jobs Act thing. They calculate taxes under current law for each one of them. You then calculate taxes under the new tax system that we just specified for each one of them. And then in order to get the revenue change, you would sum up the total tax liabilities under the current law, you would sum up the tax liabilities under your reform, and you get a 10-year revenue table. So this reform, so we raised the payroll tax by a couple points, a little bit more than a couple points in the 2019, but then we really increased the standard deduction by a lot. On net, we're losing close to $3 trillion. So if this is your first time doing tax policy design, you're an excellent company with the White House and the Republicans in Congress, losing lots of money in your tax plan. So we've successfully lost a lot of money, cut taxes a lot. And we can go down here and we can look to see, okay, who's being affected. We're looking at what's called the difference table, which is key variables that highlight the difference between the two tax plans for both the income tax system and the payroll tax system. We're looking at income bins. So these are these bins of less than 10,000, 10 to 20,000. And you can see, okay, most people are getting a tax cut in these kind of upper income thresholds, but these kind of lower income thresholds, they're not really getting a tax cut because frankly, they probably aren't paying much tax to begin with because their standard deduction is already so high under the new Tax Cuts and Jobs Act. So some of them are getting a tax cut. Some of them are seeing a tax increase because they have low taxes already, but then they're paying this higher payroll tax. You can kind of go through here and see a story about what's happening to different people in the tax system. You can also really dig in to the details if you go to this table, which is called the distribution table. You can see, okay, well, we were talking about the alternative minimum tax and the CBO budget options. Alternative minimum tax is basically a second tax system that you have to pay if your regular taxes are too low. And so we can go in here and we can see, okay, how many people are paying the alternative minimum tax in these different income groups overall. You can see both under the current law and under the reform, and all of these other details which you may or may not be interested in. The one thing that you likely will be interested in is taking this analysis a step further. What I just showed you was, okay, we're assuming you've got X, for these 300,000 households, we're assuming they've got this amount of income, and we're going to hold that as fixed, and we're just changing the tax system. But we're changing the tax system, and now some people are facing higher marginal tax rates. They're going to take home less money for every hour that they work, so maybe they'll work a little bit less, or maybe they're going to have less income now because their taxes are higher, and they're going to say, well, I want to earn more income, and so they're going to work harder. That first is this, what we call the substitution effect. The second is what we call the income effect. And so you might want to say, well, I want to take some of those things into account. And this tool provides you a couple of ways right now do that. I don't think it makes sense to, we'll go into a little detail about this. So if you do remember, okay, the substitution effect, income effect, let's say that we want to just focus on the substitution effect right now. We think that for a 10 percentage point change in someone's after-tax income, it's 1 minus the marginal tax rate. We think that their taxable income is going to go up by 4%. So we'll put a 0.4 there. We give you if you're going to use this tool, I strongly recommend that you go through and read some of these papers because this last history of taxable income, a non-technical summary, this talks about what it is that you're doing here. And the explanation that I'm giving you right now is not enough to kind of safely use this tool, but since we have limited time, I recommend following up with this paper. If you're interested in policy analysis, this type of what I'd call a partial equilibrium simulation, where you're only looking at, you've estimated some effect on the margin and you're going to apply that estimate in a partial equilibrium environment. It's used quite often in policy analysis. Reading these papers will give you a really excellent introduction to the type of work being done by the Congressional Budget Office, by the Joint Committee on Taxation. If we start the dynamic simulation now, remember we're cutting taxes, but we're cutting the standard deduction. So instead of being taxed on $100 of your income, you're taxed on $60 of your income. So it's not going to do a lot to your marginal tax rate. I might be going over your head a little bit right now, but we would expect to see that the dynamic results, so once you take into account these behavioral changes, people responding to lower tax rates, it's going to be a little bit less of a revenue loss, but it probably won't be a lot less of a revenue loss. I'm just guessing here. We'll see once we get the results.
Hey, Matt, while that's running, before you had mentioned the CBO, they don't publish the code or the details of the model. Could we sort of back out what the CBO must be doing by changing some of the parameters inside of the TaxBrain?
Yes. We've done that exercise to some extent. You can kind of do that. It gets to be challenging because there are so many free parameters. So for instance, oh wow. Okay, so this is also something that's going to be fixed in a couple of days, but it's not fixed now. So that was another buggy result. This is actually, so you can, one thing that's interesting about open source projects is that you can go and look at the release history for tax calculator. And you can even go and look at all of the changes that have ever been made. These are these things called pull requests. This will show you all of the changes that have ever been made to a project. And one change that we made very recently, this was 5 days ago, sorry, I clicked the wrong one, was right. So right here, this is actually 22 days ago, but we fixed, we're getting this, there's this really edge case where if you have really high marginal tax rates and a new law, because of the way the marginal tax rate formula is devised, the function basically blows up as it gets really close to 1 for the marginal tax rate. And so because of the new Tax Cuts and Jobs Act, it has some marginal tax rates that are super high, very, very close to 1. Some of them are actually over 1. And so what it does is it causes the behavioral response to blow up. And this is something that I actually know that the Congressional Budget Office is working on right now as well, trying to fix this before they release more estimates. So what happened to us on TaxBrain was we're seeing this like 30 trillion. Remember we'd sung 2.7 trillion before. And now all of a sudden we apply this kind of modest behavioral effect and it's like a $35 trillion reform. That's completely wrong. It's because this formula is blowing up. And so we fixed it. But PolicyBrain, TaxBrain is using a version 0.15.2, and we just updated tax calculator 0.16. And so it's not on TaxBrain yet. So I apologize, but that'll be better in a few days too. Everything, I have to tell you that when you are working with a model that represents tax law and you have a massive change to tax law, like what we just saw with the Tax Cuts and Jobs Act, it means that you're going to have to redesign a lot of the basics of the tax calculator you have in a short time period. And so this is something if you're hanging out with like CBO staff, JCT staff, people at the Tax Policy Center, all of us have been basically struggling with this kind of issue over and over again. So what I'd recommend is, maybe give it a few days before you use this. Go back, by the time you're done reading this paper and comprehending what's in this paper, you'll be ready to use this partial equilibrium simulation again. That's something it's kind of a pro and a con of having open source models, is that the modeling team at the Open Source Policy Center, we're dealing with this issue. And so I know exactly what happened when I see that number.
Right.
But if you're just a user, you don't know exactly what's happening, and maybe you'll be, I think in this case it's extreme enough that if you see that, you're going to figure out that there's a bug, right? Like, okay, why is it 0.2 billion in 2022 and 30 trillion and overall? Like, that's the type of thing you need to have some sensor to analyze the numbers that you're getting from these other resources. This is a case where it's pretty easy to identify that there's a bug, but in other cases, if you're just using this tool, something could be more subtle and you don't know. So it's good to keep an eye on the tools that you're using. It's good to research them to make sure that they're credible. In this case, you'd say, hey, that's not so credible. Like, I'm probably not going to trust this partial equilibrium tool for a little bit, and maybe I'll check in with someone at the Open Source Policy Center and figure out what the heck's going on. But in the meantime, you can definitely use the sort of static, what we call the static results, which don't include those behavioral feedbacks, and they're not relying on the changes in marginal tax rates. And so when that formula blows up, it's not causing the results to blow up. Something that's been interesting recently is that the Joint Committee on Taxation and the Congressional Budget Office are actually moving towards being more transparent themselves and making their models available. They've had a lot of pressure actually from folks in Congress. There have been like 8 congressional hearings so far this year for the Congressional Budget Office, with a big topic of discussion being the transparency of their models, because the congressional users want to be able to go in and actually use the models like people can go in and use TaxBrain. And I think one of the things we're going to face in the coming years is, and that's great. In my view, that's fantastic. It means that we're going to get better, science is going to be able to progress that way. People are going to be able to go in and help CBO develop their models better. Contributing to TaxBrain is a valuable thing to do as a student, and contributing to CBO's model is even better, right? But one of the challenges that we're going to face is that you're going to have people going in using CBO's model. They're going to do something wrong. They're going to find a bug that CBO hasn't identified yet, that if the CBO expert was looking at the numbers, the CBO expert might realize it's a bug, but the congressional staffer doesn't realize it's a bug. And so this is just something we have to face in kind of open source policy analysis, and even throughout, I think, any sort of data science and economics and other sciences. We just saw this big paper about saying that Uber drivers are only paid like $3 and change. And then the guy just came out today and said, hey, that was just a working paper, and we found a different way to do it. If you do it a different way, you get $8. So you have to keep that kind of thing in mind.
Can I ask, actually, so do you think the motivation for why they originally didn't make this information available was because of that fear of finding the typos and the bugs, or is there something else?
I think there are a few reasons. I think one of the reasons is you're working without a safety net if they're making changes to their model, and the congressional analysts can go in there and they are going to find bugs. Mm-hmm. Everyone has bugs, and any complicated software project that is always having to evolve at a rapid pace, like congressional modeling, there are going to be bugs, there are going to be mistakes, there are going to be things they could do better, there are going to be shortcuts that they take. And I do think they want to protect their reputation and just pretend that it's all perfect and pretend that there's nothing in there that could be wrong, and try to maintain their reputation. And that's part of it. I think another part of it is that some of the technology that we use to collaborate on code, some of these methods for collaborating on code, they're not new. I mean, like Linux has been around since the 90s, right? Like Wikipedia is getting to be a ancient project now, even though I kind of remember when it was getting set up. And I'm not that old. And so some of these tools that we use, and not just the tools, but the processes for collaborating on the projects have evolved a lot in the last 20 or so years, which is a blink of the eye in right. Government time, right? And so CBO, if you go to a CBO member and you say, well, you can use Git version control to track the changes, and then people can collaborate. And wait, what? Like, what's version control? What are we controlling? What's a version? So that kind of thing. I think there's a technological barrier.
Okay.
So over time, I expect that there'll be a move towards more transparency, but I also expect that shift towards transparency will be kind of halting and sticky because of the reputational issues.
Okay.
Yeah.
If you don't mind, I had a couple other questions. I'm thinking about from the perspective of my students trying to use this, or any of the students competing in the fiscal challenge. The outputs that we've seen and the inputs that we've seen have all centered around personal income. That's the totality of TaxBrain at this point, right? It's just on the personal side.
Yeah, so at this moment, it's on the personal side. In the next few weeks, it'll have some what I call benefit programs, but you can think of them as income transfer programs. It'll have food stamps, SNAP. It'll have women and children, supplemental nutrition. A lot of these, basically almost a dozen programs like that. Housing assistance. You won't be able to fine tune them in the same detail that you can fine tune the individual income tax code, but you can basically either repeal them and replace them with other components. So you could repeal WIC and replace it with an expanded earned income tax credit for single or head of household people. Mm-hmm. Replace other programs. There'll be a universal basic income, so you can replace some of these programs with like universal basic income. We don't have, there's some source code if you, let's call it like beta status source code for doing business tax revenue estimation. But if a student wanted to do that, they'd have to be working with the source code A, and B, working with kind of a roughshod product that does not have a lot of documentation. It could be a really cool project, maybe for the fiscal challenge, maybe for like a senior thesis to get in and use that tool to do some business tax analysis. But it'd be a amount to decline.
Yep.
Yeah.
And trying to connect this to the types of materials that we teach in class. We teach microeconomics, we teach macro. Oftentimes the students competing in the challenge, they'll think from a macro perspective where first I'll lay down my assumptions for economic growth.
Mm-hmm.
Then I'll take a proportion of that in revenues and then a proportion of that for expenditures, and then from which I'll extrapolate the debt. Am I right in saying that this is more from a micro perspective where we're simulating individual agents and then aggregating, so you don't need those macro assumptions necessarily?
We have the macro assumptions, which we actually take from the Congressional Budget Office, and some of those assumptions from what is they are. Some of them are micro projections, assumptions like what's the distribution of wage income going to be in 2025. Like the distribution of wage income in 2025 is actually quite important for tax policy analysis, because if more of the wage income goes to the high earners, then they're going to be facing higher tax rates. They're going to get more revenue than if if inequality is solved, we're going to lose a lot of tax revenue because now people are going to be facing lower tax rates. But then there are other, and we are kind of abstracted away from what's the debt level, what's total revenues. We're abstracted away from all of that.
Yeah. Okay. We're actually just a few minutes past the time we had allocated. Do you mind if I ask one more question?
No, not at all.
So for each of the webinars and the participants, I always ask the same question at the end, which is for the benefit of the students competing in the challenge. The goal is to stabilize the debt to GDP ratio over a 25-year planning horizon. If you had to pick one or two items, and I don't mean necessarily a specific line item, but categories of items within the budget to tackle, whether it be on the revenue or the expenditure side, is there something that's absolutely necessary that you would advocate
for tackling
to stabilize that debt to GDP?
Yeah, I think really hard about the provisions in the tax code that are raising marginal tax rates for low income individuals. So things like some of these income transfer programs that have very high phase out rates, basically anything that has a phase out rate where you get the program, but then if your income goes up, we're going to phase it out for you. In my view, that makes it so that we're really decreasing the work incentives for lower income people. We're making it less likely that they're going to take the next step to kind of get out of the low income bin. And so I think really carefully about phase outs, think really carefully about marginal tax rates and implicit marginal tax rates for non-tax programs where it's not a tax program, but we're still doing something so that when you earn an extra dollar of income, you're not going to actually get the right. So I think really hard about those types of programs.
That's excellent.
And one quick comment: if you do take that kind of macro approach where you're going to say, "Well, I'm going to look at the path of revenue," the way I would kind of work in tax calculator or TaxBrain to that approach is I'd say, okay, well, I've got my baseline, which is going to be 2 trillion, whatever. And then I'd say, I'm going to go in here, I'm going to do reform. I get that the delta is 100 billion. So I take my 2 trillion, I take off 100 billion. And you can kind of say, well, if I make this change to my $2 trillion baseline, it's going to cost 100 billion and I'm down to 1.9 trillion. And so you can still work within that macro framework with these estimates. Same as you would with the CBO budget options.
That's nice. Yeah, most of the students that usually compete would use the CBO options that you were Googling right at the beginning as a baseline framework. So that's nice that they can incorporate this.
Yeah, exactly.
Awesome. Anything else before we part ways?
Feel free to follow up with me if you have questions. I'll either answer the question right off the bat or I'll point you to the right person. So any student who wants to use these tools, I'm a good entry point. If you have questions, matt.jensen@aei.org.
Great. We're going to take the webinar. We're going to take the recording, put it up on our website, so that information would be there. And for anybody who's listening, fiscalchallenge.org. The 2018 competition is underway. You can still register. We have about 1 month to go before the preliminary proposals are due. Thanks so much, Matt, for helping out, and thanks to our partners at HPS for making this happen.
Good luck, everyone.
Thank you. Have a great night.
Bye.